All right, let's get to it. Mark, I want to come to you first. Will more foreign investors bet on India now that the political outcome is more or less certain? I hope you can hear me, Mr. Matthews.
Yeah, I can hear you. Is that the question to me?
Right. Mr. Matthews,
Yeah,
it's a question to you.
I apologize. I didn't hear your question. I better let the other person answer.
Would you like me to repeat?
If you don't mind.
Of course. Now, my question to you is, will more investors, foreign investors, bet on India now that the political outcome is more or less certain?
Yes, I think they will. Foreigners, their ownership of the Indian market is at a 10-year low. They are underweight the Indian market. They only own 16% of it. And I think that they didn't like it up until now because of valuations. India's expensive relative to other emerging markets. And I think they're increasingly realizing that there's a reason for that. And the reason is that Indian companies have positive returns. They make money that goes back to shareholders. And unfortunately, it's something that is not common in the emerging markets. So I guess it's simply because in other emerging markets where the growth prospects are much lower, owners of companies tend to focus on maximizing their own returns, and they're not thinking so much about the minority shareholders. But in India, where the opportunity is so big, owners figure, well, I'll just grow my company as much as I can, because as the company gets bigger, I'll make a lot of money too, and so that gets distributed to the minority shareholders as well. And so the New York Times carried an article on Friday that featured very prominently in the newspaper, saying that foreigners are now starting to look at India very seriously as an alternative to China. And I believe that, short answer to your question, we will see a follow-through with positive fund flows.
Right, Mark, just to follow up, you spoke about valuations. Now, markets have opened at a record high again. So what do you expect from here? And let's say post the count tomorrow?
Well, I don't know about the short term, but I can say with confidence that India is the only market in the world that that will outperform the U.S. in the next 5 years that I'm aware of. It's because of earnings growth. And I mentioned earlier, you've got strong economic growth that actually translates into profits. And for whatever reason, in other emerging markets, they have strong economic growth. It doesn't get down to the bottom line of listed companies as it does in India. So with that economic growth, let's say, I don't know, 6, 7, 8% per year over the next 5 years, I think it's reasonable to assume earnings growth of, let's say, 12, 13, 14% per year. And then if you look 5 years forward, this is not an expensive market at all. It's actually rather cheap.
For latest news, download the WION app and subscribe to our YouTube channel.